Well, good morning, traders. I want to kind of look at the markets here for this up and coming week. Kind of looking to see what I'm seeing here. I'm looking, as you can tell, here on a 6 month chart, and this is the volatility future backslash BXM. As you can see, these are 1 day candles for the last 6 months. And the color coding I have in here is Fibonacci retracements. Also, looking here, the squeeze indicator. And as you can tell, the last trading day, the VIX really went up. Went up from about a low of 25 to a high of about 27 and a half. And as you can see, the momentum has kind of been going here the last 10 trading days or so, with the VIX going up as the markets are going down. And drawing the retracement on the Fibonacci here, it hit the I'm drawing this one from the bottom up, from the low up, because VIX is mean reverting. It will 1 day eventually come back down, probably right around here at the 20 and a half level, or could go lower. And when that could happen, as you can see, the last time we spiked up here was around December the 3rd. And then it got down here on this January the 12th. We'll just say a little over a month. So we could be looking for somewhat similar of a repeat. About a month from now, it maybe come down. But just be aware, right now the market overall is bearish. Looking at the future here for the same as IWM. This is the Russell futures. Same thing, 6 month chart. Squeeze indicator showing it selling off heavy, and it is, and it's at the low of the retracement. Now, Fibonacci, the most popular retracements are right around the halfway mark. So we'll go to IWM. You might be more familiar with that. Right now, IWM is trading about 196 with a 50% retracement. You put it around 220. Now, is it going to go to 220 next week? I kind of doubt it. But just be aware that if it follows the Fibonacci retracements back to the 50 mark, it'll be 220, and the 618 extension is these two are kind of the most popular. 618 extension, we put it back at 226. So is it time to go long the IWM right now? I don't know, but just kind of keep an eye on that. It's still showing here the momentum is still down. If you trade any of the foreign currencies, this one is Australian dollar. As you can see, it's just slightly bearish here right now. But it retraced back right here to that 50% retracement, and now it's come off of it. It kind of hit that and come off of it. But right here, a good place to might play is a strangle from, say, 71 to maybe 73 and a half, as it's been somewhat floating in there for since almost the entire month of December. All right, 6C here, the Canadian dollar. It spiked up here. It almost clipped the 764 extension, so right above the 618, the strong point, and it's selling off. Is indicated by this darker blue. It is showing some signs of weakness. So a strangle here also as well, down to say 7.8, 7.8 and a quarter, up to maybe 8.0 would be a good play there. Corn futures. I've got a strangle on in corn, and you can tell it's almost to the retracement all the way back here to the high of 619. If it retraces back to 50%, it'll go to 563. So, playing a strangle in corn, you might want to go up here and play, say, 650. ZN, the notes, as you can tell, the price of the bonds is starting to increase a little, which means that interest rates are going to go down. And If it retraces back to the 50% mark, right around 130 and 14 points, which it was just there December 31st. So you can play this strangle here for about $1,200 as well. Might want to consider playing the low, the put side around 127, and the call side, and you might want to go up to 130, 131. Give yourself a little room in there. But that's kind of what I'm looking for in the markets here. Some ideas to trade. Good luck to you out there.